A very good evening to you, ladies and gentlemen. I'm excited to welcome you to the 139th Bar Association of Sri Lanka webinar, organized by the Bar Association Seminars Committee on the topic Budget 2022, Legal Implications. This is the sixth webinar of the first webinar series hosted by the Bar Association of Sri Lanka and conducted on the Zoom platform. And for those of you who are unable to register on Zoom, hopefully you're joining us on the YouTube live stream on the BASL YouTube channel. Before we start, I would like to thank the Seminars Committee of the Bar Association, the Chairman of the Seminars Committee and the Secretary of the Bar Association, Mr. Rajiv Amarasuriya, who celebrates his birthday today. Wishing you many happy returns of the day, sir. Convener of the Seminars Committee and Assistant Secretary of the Bar Association, Mr. Pasandu Silva, and the co-conveners, Mr. Pandula Vanniyarachi, Mr. Ushan Uberatna, Ms. Ann Devananda, and Ms. Nikini Mapitikam. I would also like to take this opportunity to thank the President of the BASL, Mr. Salih Pires, President's Council, and the other members of the Management Committee of the Bar Association for all their support and guidance. As I've already mentioned, today's topic is on Budget 2022, Legal Implications, and it gives me great pleasure to introduce the esteemed panel and moderator for this evening. First, let me introduce Mr. Sanjeeva Anthony. Mr. Anthony is an attorney at law, notary public, commissioner for oaths, and a registered company secretary. He's also a fellow member of the Chartered Institute of Management Accountants UK, a Chartered Global Management Accountant, and a fellow member of the Institute of Certified Management Accountants of Sri Lanka, as well as a fellow member of the Certified Professional Managers. He commenced his career at PricewaterhouseCoopers prior to joining Jetwin Hotels Limited as a finance manager in 1996 and is currently the executive director. He's also serving on several directorates, including a publicly quoted company. Next, let me introduce Mrs. Charmaine Tilakaratne. Mrs. Tilakaratne is the director of PricewaterhouseCoopers, providing tax solutions to a multitude of domestic and international clients. She has experience both in professional service firms and the mercantile sector. She is a multidisciplinary professional qualified in both law and accountancy. She is an associate member of the Chartered Institute of Management Accountants UK and a Chartered Global Management Accountant, a past finalist of the Institute of Chartered Accountants, as well as an attorney at law. She was also a member of the Tax Committee of the Bar Association of Sri Lanka. Her experience in the tax field includes advising clients on international cross-border tax planning, corporate and individual income tax, indirect taxes, and levies. She has also advised clients on corporate restructures, mergers and acquisitions, cross-border transactions, foreign direct investments, tax implications on employee share ownership, and stock options. She has also advised clients relating to financial services, fast-moving consumer goods, manufacturing and trading, as well as import and export sectors. She also possesses experience in carrying out tax due diligences and has also been involved in lodging appeals on behalf of clients to the Commissioner General of Inland Revenue, Board of Review, and assisting legal counsels in tax litigations. Finally, let me introduce Mrs. Tanuja Pereira. Mrs. Pereira is a Senior Deputy Commissioner at the Department of Inland Revenue. She's an attorney at law and holds a master's law degree from the University of Colombo. She also holds a master's in business administration in taxation from the Postgraduate Institute of Management, Sri Jayawardenepura University, as well as a postgraduate diploma in international relations from the Bandaranaike Center for International Studies. Previously, she has served as a tax policy advisor to the Ministry of Finance. The moderator for this evening is Mr. Niranjan Arulprakasam. Mr. Arulprakasam is an Kofi Annan International Scholarship holder and has majored in economics and law from the Macalester College, USA. He also holds an MBA from the Instead School of Business from France. Prior to being called to the bar in 2012, Mr. Arulprakasam worked on Wall Street as an investment banking analyst for Merrill Lynch, New York, and thereafter as an associate vice president at Amba Research, Sri Lanka. Mr. Narul Prakasam is also a member of the prestigious Omicron Delta Epsilon Honorary Society. While practicing law, Mr. Narul Prakasam was a consultant to the Ministry of Finance, where he went through 2 budget cycles and was also a member of the Board of Directors of the Regional Development Bank. He currently specializes in civil litigation, particularly public law and commercial law. With that, let me remind members joining in the session by Zoom to send in their questions through the Q&A chat box to reach the moderator. I will now hand over the proceedings to the moderator. Over to you, Mr. Narul Prakasam.
Thank you, Tanuja, for that introduction. Good evening, ladies and gentlemen. Good evening, ladies and gentlemen, and welcome to this webinar titled Budget 2022 Legal Implications, organized by the Bar Association of Sri Lanka. At the outset, I must say that this webinar is distinct and unique. While the other webinars addressed or covered a specific area of law or a specific statute or certain skills and etiquette required to enhance your career in the legal profession, this webinar is solely driven by a significant event that took place on the 12th of November, 2021. That, ladies and gentlemen, is the national budget. Given the economic situation, the public debt, and the foreign currency issues, the Standing Tax Committee of the Bar Association of Sri Lanka, chaired by Mr. Suresh Pereira, Attorney at Law, thought it fit and relevant to appraise the membership of it on its legal implications. As such, this webinar is broadly structured into 3 distinct areas. Number 1, the legal process behind passing the budget. Number 2, preparation and implementation of the budget. And finally, the implications on the private sector. Once our esteemed panel addresses these 3 topics, we will take questions from the audience, depending on the time remaining. With that, let me first invite Mrs. Sharmeen Tilakaratne to speak to us on the legal process behind passing the budget, and to also briefly touch on the gazette issued by the Central Bank of Sri Lanka, dated 28th October 2021, relating to the conversion of foreign currency remittances to rupees. Mrs. Tilakaratne.
Thank you, Niranjan.
Yes.
Let me just hear me.
Yeah, we can hear you. Yeah, we can hear you now. It was a little.
Can you hear me, Niranjan?
Yes, can hear you. Can hear you, Sharmeen. Go ahead.
Okay. Let me just share my. Okay. Let me just share my screen. Can you see my screen, Niranjan?
No, not as yet. No.
How about now?
Yes, now we can.
Right. Okay, thank you. Let me know if the slides are not moving. Is it moving?
Yes, it is.
Okay, fine. So good evening, everyone. Thank you for joining our webinar. I will be taking you through, as Niranjan said, the process of the budget 2022, which was presented in Parliament on the 12th of November. So to begin with, the budget is the more popular name for what the parliamentarians refer to as the Appropriation Bill. So like any other bill presented in Parliament, the budget also goes through the first and second and third readings. And once presented in Parliament at the first reading, after the first reading, it can be challenged. So the Appropriation Bill is actually the piece of legislation that gives or permits the government to draw funds from the consolidated fund for their expenditure and also to borrow and collect taxes, new taxes. So the Appropriation Bill is what gives them that authority. So if you the budgetary process actually starts, so this is the whole cycle. I'm still at the beginning here. The budgetary process actually starts first quarter of the year, where the Minister of Finance issues a budget circular requesting the various departments and government departments to make and send in their estimates for the expenditure for the year, which is then reviewed and discussed and put in the appropriation bill. So the appropriation bill gives you the broad headings of income and expenditure. So if I just pause here and take you to the expenditure appropriation in the bill this year in 2022, you'll find these are the headings. So as you can see, the largest allocation has gone for the Ministry of Defense, and these are the various percentages of expenditure allocated. Now this is a summary of, and it's presented in the budget speech as an annexure of the total income and expenditure. So you have the total income and the expenditure, and you will arrive at a deficit or surplus. So in the recent past, over a few decades now, we have never had a surplus except in one instance when the primary account reflected a surplus. But for the budget 2022, it is currently a deficit. The primary account is your income minus expenditure without loan repayment costs. So it's only in one instance that it has been, in the recent past, it has been a surplus. Otherwise, it has always been a deficit. So just going back to the process, as I mentioned, this starts approximately at the first quarter of the year. And the reason is that there is a long process, and this process should end in time for January, because some of the proposals are to be implemented January of the next year and April of the next year. Generally, it's in October. The first reading of the appropriation bill is done in October. But of course, if there is a situation where a new government has just been appointed, or we are going in for an election, then it's postponed, and a vote on account is undertaken. A vote on account is where it gives the Parliament or the government the authority to spend for existing projects. No allocations can be made for new projects, but just for your existing expenditure, which is essential to the country, can be allocated under a vote of account, and it's generally for a short period of time. So once the bill is presented for the first reading, as I mentioned, it can be challenged in court. And although it is a normal finance bill, it also has a very unique feature to it, as in it's the bill that the Minister of Finance uses to present to the general public, to the country, in fact, and to the international community, the government's economic policy for the upcoming year. Right. And actually, so the second reading is what does this. The second reading is what we commonly refer to as budget day. The budget speech gives you the details of what was included in the appropriation bill. So how the revenue is going to be generated, what is the expenditure going to be used for, what are the upcoming projects, and so on. It's actually a little, it's the information contained in the second reading or in the budget speech is confidential and is not known other than to the immediate fiscal policy department committee who is involved in the preparation of the budget. It is generally not known to the general public because it contains sensitive information. For instance, if you know beforehand, just as an example, that certain taxes are going to increase on certain commodities, there will be a scarcity of that product in the market up until the budget day, until it's implemented. For instance, this time the markets seem to be aware that there would be an increase in excise duty on cigarettes, and about a week before the second reading of the budget, you found there was a shortage of cigarettes. So it contains sensitive information and therefore is not known prior to the second reading. So on the second reading, the Minister of Finance unveils the policy for the future through the budget speech. So once the second reading is done, we move on to the debate, which can take about around 7 days, and thereafter there will be a vote to pass the budget. And like any other bill, there will also be amendments, committee stage amendments to the bill, which is taken up again at the committee stage, or what we call the third reading of the budget. And then again, there will be another vote, the third reading division, the vote, which is supposed to be at 5 p.m. on 10th December for the budget 2022. Now, the budget is supposed to be passed by a simple majority. Of course, if it is not passed, then the cabinet of ministers stand dissolved, and then the president has the power to appoint a new cabinet and present a new appropriation bill with amendments. Right. So that's in a nutshell the process of passing the budget in terms of the legislation. Now, some points that I'd like to highlight here is from a tax side. I won't go into the details on the tax proposals that were presented with this budget 2022. Tanuja will take you through those. I just want to throw out there or just highlight some legal implications on some of these proposals that were presented. One is there was a tax, social security contribution levy that's similar to a turnover tax, similar to the NBT tax that was there previously. Now, as we know, under the 13th Amendment, there are certain subjects that were devolved on the provincial councils. And this is the list that was devolved on the provincial councils. So if you see here, you get turnover tax on wholesale and retail sales, and then licenses, and even fees under the Motor Traffic Act. Now, these are all new taxes that the government had proposed with the second reading of the appropriation bill, the budget speech. So it's interesting now that it has been presented to note that it is actually a subject that is devolved on the provincial council, and what is the process then thereafter. Now, as we all know, the provincial council so the normal process would be, if the provincial councils were in existence, you present the bill, publish in Gazette, then the president has to refer this to the provincial councils, get their approval to pass the legislation by parliament. It's placed in order paper once the approval is obtained. So if provincial council gives their approval for parliament to pass the legislation on a subject that was devolved on the provincial councils, it can be done so by a simple majority. If the provincial council does not agree, then it has to be passed in parliament with special majority, 2/3 majority. Now, in a situation where, like now, currently, what we are facing, when the provincial councils are not functioning, there again, I believe there have been certain court cases on several occasions to say that if the provincial councils are not existing, the parliament has the power to take over and pass legislation on subjects devolved on the provincial council, right? So those are a few of the nuances in respect to passing of the appropriation bill or the budget speech. Now, going into this budget, there was a lot of discussion about how we are going to address the current foreign currency crisis. What will be in the budget that will sort of give comfort to both the market and the investors, foreign and local, on how this foreign currency crisis is going to be addressed. Whilst the budget came up with quite a few proposals, none of them are quick fixes. They are not something that can be implemented or where we can reap benefit overnight. For instance, now the proposals are there to increase foreign currency, but over a period of time. For instance, there is going to be a lot of concentration on exports and import substitution. Expenditure has been allocated to encourage import substitution, setting up, for example, in case of apparel exports. Apparel exports, as we all know, is one of our large foreign currency earners. But the net income to the country is a little bit less because of the cost we have to bear on importing raw materials. So to that extent, the government is now trying to see if we can produce our own raw materials here. And there has been a certain proposals around that. Then they've also been trying to encourage the knowledge hub. Knowledge hub is a quick revenue, a quick foreign currency revenue puller for the country, because the net income is higher. There is not much of, there is in case of a knowledge hub where you export services, you don't have raw materials and so there is no input cost. So the saving to the country is greater. And again, to that extent, the government has introduced proposals around what they call a commercial hub and knowledge hub. A commercial hub is where they want to project Sri Lanka to be a center for banking and insurance and even arbitration. So that's where it would be of importance to this forum here. They propose to market Sri Lanka as an arbitration center. Of course, there's a lot that needs to go around that before it can be implemented. There has to be a proper framework, proper human capital, and so on. So human capital is actually another area where the government has concentrated in this budget. They've recognized that in order to position Sri Lanka as a knowledge hub, they need to draw or improve quality of human capital, and to that extent, they're making a huge investment on providing fiber optic technology to the entire country so that students have access to online learning, right? So those are all long-term measures that have been introduced under the budget to address the current foreign currency crisis. Now, as a short-term measure, as we all know, recently the government or the central bank published this gazette on 28th of October 2021, which mandated that exports of both goods and services, the proceeds you get from the export of both goods and services, be converted 100% into rupees. The foreign currency you get from the export of goods and services be converted into rupees. Now, previously, just to give you a background, it was only applicable to exporter of goods, and the conversion was mandated at only 25% of your proceeds needed to be converted. And these are the 4 gazettes that were there with respect to the 25% conversion. These gazettes are now repealed by the introduction of this new gazette. So this is not something new to Sri Lanka. It's actually followed by both India and even Bangladesh. India has these rules for quite some time, and I think Sri Lanka, I believe, has borrowed it from India. So it's not something new to the region. It's been there, and it's there to address these type of foreign currency issues. So its effective date is 28th of October, and it's applicable to all exports of goods and services made on or after 28th April 2021, and where you get the proceeds after 28th of October, right? So once you get the proceeds after 28th of October in respect of any export made before April, you need to convert 100% of what you get the proceeds, but there is leeway for you to make provision for certain expenses, right? So it's not totally unreasonable. They're asking you to only convert the income you get less whatever you need for expenses you can keep, and convert the net balance. And that conversion has to happen before the 7th of the next month, 7th day of the next month, right? So if I just take you, so these are the authorized payments. So once you get the money into your bank account, by the 7th day of the following month, you need to convert 100% of it, but you are permitted to keep back money in dollars or in the foreign currency for your authorized payments. So these are the authorized payments that have been given: outward remittances in respect of current transactions, withdrawal for travel, debt servicing payments, and any purchases that you need to do. So it's actually not going to, there is no need to panic. This rule is not really going to hamper any commercial operations because it's been reasonable. It's allowing you to keep money to make any payments you need. And current account transactions are very wide. It's defined in the Foreign Exchange Act under the schedule. And also there's been a directive issued by the central bank which gives an indicative list of the current account transaction, which fairly covers your day-to-day mundane expenses. So there shouldn't be any interruption to your commercial activities. So these are the type of expenses that you can keep money back for, and only the net amount you need to convert by the 7th of the next month, right? So the banks are supposed to strictly monitor this and report to the central bank. Anyone not adhering to these rules can face penalties under the Monetary Law Act. Banks have been given strict rules. There will be actually a further circular and guidance on how the banks are to monitor this. At the moment, they're already doing it for the goods. Now they have to come up with a set of rules for services, because unlike goods, the export of services will not be known until the money comes. In case of goods, you have the export custodex to track the date of export. So in a nutshell, this is the Gazette of 28th October 2021 on repatriation of export proceeds, which needs to be converted. And I just forgot to mention one other point. In addition to the conversion, there is also a rule on the number of days you need to convert, you need to bring back the money. So any export of goods and services, you need to bring back the money to the country within 180 days from the date of shipment of the good or the provision of the services. Previously, it was only applicable for goods under these gazettes. Now it's applicable for services. So it applies to the forum here as well. If you provide any services to any foreign parties, you need to ensure that the money for those services come back within 180 days. Right. So Niranjan, that concludes my brief presentation. I will hand it back over to you.
Great. Thank you. Thank you very much, Ramin, for that very insightful presentation. Let's now move to our second area of the national budget. And for that, I now invite Mrs. Tanuja Pereira to address us on the preparation and implementation of the national budget, and also to touch on some of the tax changes that were proposed in the 2022 budget. Tanuja?
Yeah, thank you, Niranjan. Thank you for giving me this opportunity. And yes, we're starting with the budgeting process. Charmaine clearly explained how the legal process takes place. You know that it's the finance ministry, the main body involved in the preparation of budget. So finance ministry with the other departments under the Ministry of Finance, like budget department, fiscal policy, development finance, and all other departments involved in this budget preparation process. The appropriation bill contains the estimates for the following year, the next year, based on the prevailing situation, prevailing condition. This appropriation, what is contained in the appropriation bill, and in addition to that, based on the government policy, based on the new proposals, the projects government plan to initiate next year, the allocations, the additional allocations that are estimated in the appropriation bill, other than in addition to that, the other allocations for the new projects and new other activities are made through the budget proposals. So it's a kind of supplementary to the appropriation bill, what is contained in the appropriation bill. So the thing is that when preparing this budget documents and the budget preparation, normally the prevailing situation and considering the prevailing situation and the economic growth and the expected inflation, all these factors taken into account, and giving weight to these factors, the estimates are prepared. And once once this budget is passed by the parliament, then comes the implementation stage. So before going to that, I would like to explain on the budget tax proposals contained in the 2022 budget. So actually, the last year when presenting the 2021 budget, the government assured that no other tax revisions will take place for 5 years. But unfortunately, due to this COVID situation, and the government, the revenue has decreased a significant amount due to this current situation of the country. So the government is compelled to have new revenue avenues, new tax revenue measures, and that's the reason behind the implementing this or proposing these new tax measures. So the main item is in this new tax proposal is that introduction of this surcharge. The surcharge on the taxable income at 25% rate. So it's very important. This is the taxable income. If you remember, there was a similar kind of initiative in 2016 when at that time introduced the super gain tax under the Finance Act. But that time it was on the profit before tax, not on the taxable income. But now it is the taxable income. So when it comes to the taxable income, it is the profit which is adjusted in accordance with the provisions in the tax law. So if a person, if a company is an exempt entity, then such company or such person will not be liable to pay the surcharge because that person doesn't have this taxable income. But if you take an entity which is liable for tax at 14% concessionary rate, of course, that person, if he is over and above the threshold, supposed to pay the 25% surcharge. So this 25% surcharge is applicable on entities of which the turnover exceeds, not the taxable income exceeds 2 billion rupees. So taxable income, if you take the companies or the entities with more than 2 billion taxable income, there might be a very few. You know that these are the largest among the large taxpayers. So these large taxpayers are the main contributors to the government revenue. If you take income tax collected in the country, more than 80% of this revenue coming from these large taxpayers. So the largest among the large taxpayers will have to pay this tax. So if you take a bank which has this taxable income for 2021, 2 billion or above, then that bank has to pay 24% normal income tax plus another 25% surcharge. So that is the new proposal, but this is a one-off tax. So it is only one time. So not it will not charge again and again, but at one time it should be paid. But still we don't have the deadline for payment when it's to be paid, and whether there are any exemptions applicable, and what how many the government has estimated 100 billion rupees from this surcharge. So if the estimates are correctly made, then this revenue to be generated. Otherwise, what is expected will not happen, because you need to have this amount of tax, this amount as estimated. And the thing is that when it comes to the 2021 taxable income, the 2020 and 2020-21 taxable year, the return to be filed by 30th November this year, that is 30th November 2021. So we don't know, being tax administrators, we don't have the taxable income figure of these entities. So they're supposed to file the return, then only the administrators get to know their taxable income. So if it is profit before tax, or if it is based on the audited accounts, if the accounts have already been published, and no one can manipulate these things. But the thing is, when it comes to the profit before tax, the taxable income is calculated for the purpose of tax payment. And if anyone is somewhat below 2000 at maybe, let's say 100 rupees, then this margin people will benefited, and the people who are falling within this margin, they will have to pay at the twice as their normal liability, because 24% is the normal percentage and standard percentage of income tax, and this additional surcharge is 25%. And if 14% is the normal tax rate applicable for that particular company, then it will be more than double, because the 25% surcharge will be there. So we have to wait and see. Once the legislation is enacted, only we will get to know what are the exemptions, whether there is any exemption. And one other thing, if you take super gains tax, when deciding the liability to the super gain tax, the companies, the holding companies and the group of companies, the cumulative, all the subsidiaries and holding companies profits taken collectively. But here no such such a reference in the proposal. So we have to wait and see whether how it is considered for the group of companies and the exempt entities. Then the next tax proposal is this social security contribution. So, you know that similar kind of taxes, they are few years back, social responsibility levy, but that was paid on as a percentage of the income tax payable. Now it is on the turnover. It seems to be on the turnover, because turnover, but there is a threshold, 120 million per annum threshold is there. The turnover over and above 120 million will be subjected to this 2.5 contribution, and there is no deadline. The surcharge is only for one time, but 2.5 there is no deadline. So it seems that this will continue for some more period. And the revenue estimated from the social security contribution is 140 billion. So the 140 billion is the revenue expected from this particular tax. So there is no reference to exemptions. And if you take NBT, this seems to be somewhat similar to the NBT. NBT was at 2% rate, and there were exempted services and exempted articles. But here, no reference to any exemption. So based on the turnover, this will charge, and this seems to be a kind of hybrid one, because 120 million threshold was there for economic service charge. But the thing is, economic service charge could have been set off against the income tax. And if you take NBT, there was a input mechanism for the NBT, but that input mechanism is not there. Currently not there. I don't know whether once the legislation come into effect, we will, sometimes there might be. But according to the proposal, no such a input set-off mechanism is there. So there is a possibility of cascading the taxes. So if you take a manufacturer, and if there is no input mechanism, then the cascading effect would be there. And the next one is the value-added tax on financial services. Now, if you take these three taxes, if you give an example for an entity which will be subjected to all three taxes, what comes to my mind is a bank. So a bank with more than 2 billion taxable income will have to pay surcharge. Then over above 120 million, they will have to pay social security contribution. And in addition, the financial VAT, which is paid on the supply of financial services, will increase to 18%. Currently, it is 15%. And similar, there is a sunset clause. This particular increase will applicable only for the next year, starting from January 1st to December 31st, 2022. And we had similar kind of tax, DRL, debt repayment levy. And originally, when it was enacted, imposed, it was only for up to 31st December 2021, but it was removed effective from January 1st, 2020. Now it's like the DRL reenacted for another 1 year time, but lesser rate. It was 7%. Now it is in additional 3%. So no other calculation, only the VAT on FS plus 15% increase to 18%. These are the main 3 tax proposal, revenue proposals, tax revenue proposal in the 2022 budget. And now we don't, of course, VAT FS rate increase, so you can implement with effect from January by issuing even a gazette notification. But we don't have any legislation for the surcharge, so we have to, sometimes it may be under Finance Act surcharge, because it's a one-off tax. It will be enacted imposed under the Finance Act. But social security contribution, since there is no deadline for that, and it seems it will be continued for some period, there are supposed to be a new legislation. So this is effective from April 1st, giving space to enact this thing. You know that it is to enact tax legislation. First, you have to get the approval from the cabinet, and then go to the legal draftman, then go to the Attorney General's department, get it cleared from there, go back to the cabinet, and then pass by the parliament. So it takes some time. But to enact this social security contribution, we have 4 more months. And for this surcharge, only 1 month is there. So there might be there is a possibility of legislation come in later, but implemented with the retrospective effect. So we have to wait and see until at least the laws are published in the Gazette Supplementary, and see the exemptions, the deadlines, and other things. So that is it about the implementation of these tax revenue proposals. And I think my time is up. Over to you, Niranjan.
Thank you, Tanuja, for that very informative presentation, especially on all the taxes in the 2022 budget. I would now like to invite Mr. Sanjeev Anthony to address us on the legal implications to the private sector, with examples from the tourism sector, and also if you could touch on some of the lobbying efforts made pre and post budget. Mr. Anthony.
Yeah, thank you, Niranjan. Can you hear me clearly?
Yes, I can.
Yeah. First of all, I think from private sector, we are mainly practicing in the private. We are practicing this all legislation and all coming is affecting the companies which we are working. So I think first of all, as Tanuja said, the consistent policy which the government was promised to keep and keeping it up to now, we are really appreciate, because whatever said and done, it is important that investors' point of view to have a consistent policy. Of course, from total industry as well as from tourism industry point of view, I think the government spending on the vaccination has given a lot of hope for the urgent needed foreign currency, which we have to bring through tourism, which the tourism was able to open all its doors purely because of this vaccination program. So I think as a government has taken initial steps towards creating this environment. Of course, if we try to compare the VAT GST with the other countries, Sri Lanka is still at a low tax regime, going at about VAT at 8%, and basically compared to India going at about 18%. So I think government has maintained that is also as a policy consistent. Even tax 24% is reasonably at the low level compared to India at 30, Pakistan at 29, and continue. So while these positives are there, government also has targets on 2027 to increase our foreign reserves up to 10 billion US dollars. And with that target, you require especially exports and even services to tourism industry to gain this required foreign currency. So government also planning from current 10% of GDP tax collection to increase to basically double it from 9% to roughly about 18% of the tax collection on the GDP as well. So one issue, if I start from the tax surcharge, is that it is not actually new tax. 1960 tax started first, and again going back to 78, 79, 84, 85, 89, 90, 95, 96, 2001, 2002, 2015. These one-off taxes have come on and off. But I think under current circumstances, it is understood that it is necessary for the government revenue generation. We have to go. So we as business enterprises, we hope this will not repeat, and this will continue as one-off, because the message we are trying to give to the investor, especially the local investors as well as foreign direct investors, that these one-off taxes are coming, and especially when we enact with retrospective effect. Basically for last year, 2021, which we are charging, and as per the current even accounting standards, we have to charge that more likely to this year rather than charging as a prior adjustment to last year. So it will hit to this financial year. So that can raise issues from bank's point of view. One is capital adequacy ratios and what kind of a liquidity which we are going to maintain. So hopefully that will, these kind of ad hoc taxes will not upset the business community and their liquidity and capital adequacy going forward. And I think, as I said earlier, that excellent vaccination program, which we all are going on, open the country purely due to that. So government requests this one-off tax, I suppose they don't, when you have a consistent policy stage. But it is important that as a policymakers, I think the message we are taking and lobbying to the government also not to repeat this again and again, because if that becomes again once, twice, thrice, people will lose the confidence on Sri Lanka as a destination, and our required foreign direct investments will have a massive hit on our foreign currencies. So that is one point on the private sector point of view. Again, coming linked to that, social security contribution also basically a tax. Very likely that this tax will not have an input like VAT input set off against the output. So what that means is this tax will have a cascading effect on the going forward. Now, one industry which we are lobbying and working on is this tourism industry. Actually, from 21st April 2019, then 2020 pandemic first wave, second wave, third wave, and Sri Lanka has tourism revenue has almost become to zero, and other than few companies. And also, if you really look at if tourism industry was really working, we should have earned about close to $4 billion per year, close to about $8 billion by now. And that would have been one of the major reliefs for the government to maintain their foreign reserves, as also this current situation we will have not arisen if the tourism industry has worked. So due to the global as well as local situation, this has really affected. And while the industry is survived purely because of the government together central bank allowing the moratoriums which will extended till 30th June 2022. But what that means is if you have a 100 rupee loan on 31st March 2019, now that loan has become 140 or 150. By 40 to 50%, it has increased by 30th June 2022. So you have to start paying the loans which has been not paid with the interest on interest as well. So going forward, and also the main point is to bring this tourism back to Sri Lanka. Sri Lanka should position itself and work on the competitive edge on the pricing. So these additional levies and taxes on the tourism industry, whether we can compete in the international market and whether required dollars can be brought, is a matter which as a hotel tourism industry, which we are lobbying with the government to have a relook on that. I know that there are no exemptions at the moment for the social contribution, social security contribution, but we are looking forward just to survival because hotels has to be maintained and going forward. So while I think the industries, so I touched about the banking industry, the liquidity and all, the tourism industry, what kind of cash flow issues they can have purely because of this contribution. And another area which we are as a industry, we are concerned is this special goods and service tax, where again, especially telecommunication, which earlier they will be charging VAT and they can again claim input VAT against output VAT. And we are not quite sure how the special goods and services tax is going to work. And very likely that there's no input going to claim again. So basically that particular telecommunication service provider will not have VAT input to claim. So basically there will be a tax charging on that. In addition to that, all the suppliers whom we are charging also will not have input VAT from coming the special goods and services tax. So there will be again cascading effects coming on the taxation, which is hitting to the different industries on this particular proposal. Of course, one important thing is that we, from as a private sector, telecommunication, 5G going for frequency for tendering. I think it's if that is implemented, we hope that that will be implemented on tendering rather than allocating to people. So they're going for a tender process, and it's a very progressive move. And we hope that legislation will pass through. Then another important thing from our practicing lawyers' point of view, again, this imposition of fee on vehicles, where I thought I'll just touch on that as well, where basically with there's an accident, where proposal is from the insurance company to basically to have a fee charge from the objective is to avoid the accidents and discourage people to reckless driving. I think it's a progressive move. Of course, how the insurance companies will react and how the particular individual has to negotiate their insurance premiums going forward, yet to be seen after the legislation comes in. Again, I saw an interesting proposal with regard to the proposed modernization and upgrading of vehicles. And I suppose that under Motor Traffic Act, there is a particular sections which you can't modernize on certain acts. So we hope that they will sort it out, working on implementing that particular proposal. Then again, another concern is we saw that the insurance corporation, the life fund and the normal general insurance fund is going to amalgamate. We thought having two funds is more safer, but the purpose, of course, not known, but amalgamating the life fund and the general policy fund whether you have enough safeguards for the life insurance policies are going for 30, 40 years, and whether you can have the strength with the other policies yet to be seen. Another one progressive important thing is again the free ports. From the, I think from country's point of view, from Sri Lanka, daily over 300 ships are passing through Sri Lanka without touching our ports, purely because we don't have the competitive edge like the Singapore and all. So it's a major revenue driver for the government going forward. So it's that progressive proposal, and hope that they will pass the relevant legislation. And as it proposed, looks like the customs and all the regulations are not coming under effective for this free port legislation. So that we hope that also will a progressive move. And I thought from the practicing lawyers' point of view, again, this contributional pension scheme also has been suggested. This was just coming on and going on for several proposals. So hopefully these kind of social security systems is a must for the country. We know that we just faced the COVID the last 2 years, how difficult the people survived. So I think all the other countries had this. One thing is the people who has pensions. Second thing is people who do not have pensions. So I think especially the lawyers, doctors who private practice does not have a pension scheme unless they save themselves. So we thought from private sector bringing this proposal also a very progressive proposal going forward. So those are the main points, Niranjan, I would like to bring. And if there's any other questions, we can I can take forward.
Thank you very much, Mr. Anthony, for giving us the perspective from the private sector. Let me start with some of the questions that we have. The first question is to Mrs. Tanuja Pereira. What percentage of budget proposals get implemented? And if a proposal is not implemented, what happens to that particular allocation? Tanuja?
Yeah. I don't have the exact figure to say this percentage of budgetary proposals have been implemented, because you have to wait. Now the allocations are made for the next year, right? And the end of the year only you know how much the ministries have spent. So you know if you take this 2021 year, there might be a huge sum of money which have not been spent, because you know these projects and many of things didn't work. So due to this COVID situation, and these payments are made out of consolidated fund. So when the need arises, the paid out of consolidated fund, then if the funds are not utilized by the particular ministry, then they have to send it back to the consolidated fund. That is how it works, the public finance works. So you can't keep the excess money at the end of the year if you have not spent this money for those projects, because based on this what you have spent this year, you will get the next year's allocation. And if you have not done, and these will be revised time to time by the ministry, and it is not remain in the hands of the other ministries, it will come back to the consolidated fund.
Thanks, Tanuja. But it's correct to say not 100% of the budget proposals get implemented.
No, yes, we can't say, because there are a lot of proposals which have not been implemented.
Thank you. Thanks, Tanuja. The next question is to Mrs. Shamin Tilakaratne regarding the gazette of conversion of foreign currency remittances to rupees. What is the position of repatriation for companies that are where the majority is foreign, the shares are held by foreigners? So a foreign company, what's the position with respect to repatriation and that gazette?
So Niranjan, I believe the question you're asking me is where we have foreign investors or foreign shareholders in companies incorporated in Sri Lanka, can we declare dividends to them, and can the dividends be sent out of the country? Given that we are now we have to convert the entire net proceeds we receive in foreign currency back into rupees. So the answer to that is declaration of dividends out of current year profits is actually a current account transaction. And as I mentioned, in the Gazette, they are permitting your current account transactions. So, and it's not very clear in the Gazette, and I believe there have been some forums and some associations that have written and asked for this clarification. They've requested clarification as to whether in making a provision for your expenses. Now, in the Gazette, I mentioned you could make, you can keep back what you need for your expenses without having to convert that. So in keeping back those expenses, can you make provision for your annual dividend declaration? And that's something that clarification has been sought, and we are actually awaiting reply from the central bank. But strictly just prima facie looking at it, declaration of dividends out of current year profits is a current account transaction, and that should be permitted. So you should be able to make provision for dividends out of the monies, the export proceeds you get, before you are mandated to convert it 100%.
Thank you very much, Charmaine, for that answer, and also for rephrasing my question in a more eloquent manner. My next question is to Mr. Anthony. Could you please elaborate on some of the lobbying efforts made by private sector companies pre and post budget?
Yeah, actually, pre-budget from the industry, several proposals were given, but about 95% has been not incorporated by this budget. It's little different to other budgets. So different proposals have been given. So basically, at the moment, they have to balance, I suppose, the in and out and at the current situation. So basically, this particular year we do understand, but there are certain industries which requires a lot of clarifications and some amendments. For example, this, as I said earlier, social contribution, which we have been social security contribution, which has been given when the margins are lower than, basically when you have 1 or 2% margins, what kind of exceptions you get on that, especially when bunkering and all those, there are different industries. Even as I said, the tourism industry, we have lobbying for this exemption for the social security contribution, whether we can get for at least 1 or 2 years delayed, because we have a cash flow issue and we have to maintain, and we are lobbying for that. So there were several proposals. I think no point going through them now. So at least I think with these proposals, what has been affected to the industry and the sustainability of it's critical that government relooked at on certain proposals which we have made. One thing is the most important thing is cash outflows when we have to maintain the property. Now, especially I'm talking on the tourism industry, and we have to maintain those properties. Otherwise, you can't get the customers from other countries and compete like Mauritius, Seychelles, Maldives. At the moment, if we look at now, the Maldives is full for next 50 days. Maldives whole island is full of tourists. Just imagine the potential the tourism has brought despite to the corona. Now at the moment, from starting from December end till about February, you can't get a single room in Maldives. So that is the potential which Sri Lanka can easily touch, and we are ready. And we have a lot of issues with regard to human resources, because all our human resources are going out from Sri Lanka to Maldives and Dubai, and especially to Maldives because they are doing well. And so it is apparently important that government support at least next 12 to 18 months to this industry, and taking consideration that we are expecting at least several billions of dollars going forward for next 12 to 18 months, which are crucial for the country going forward. So it is absolutely important knowing our neighbors, how the foreign currency earning by them, to convert part of that. Actually, the connectivity has started very well. So many new airlines have started from connectivity to different destinations. Now these new destinations also have started. So it is absolutely important to give this required oxygen for the industry, at least for the next 12 to 18 months to get this going. So basically, we are lobbying very hard for the social security contribution 2.5%, to whether they can delay for about 12 to 24 months, depending on the at least year by year to relook at it. Second thing is we are also lobbying that we have to start paying all the loans by the industry starting from 30th June. How basically how we can get some kind of concessions to at least delay it, because certain small operators will not be able to negotiate with the banks. Only the big companies will be able to negotiate, but SMEs is going to affect very much on that. So those are the main things we have done here.
Yeah, Mr. Anthony, to be a little clear on that, all the lobbying efforts that you just mentioned, from a legal perspective, is that made after the budget is approved and before the legislation is enacted, or is it made immediately after the budget speech? At what stage are these representations made?
All has been made just after the budget speech, because anyway this has to be done prior to the enacted passing in the parliament. So basically we are lobbying very hard at the moment on behalf of several industries. So so far our feedback is not that positive. So we are trying our best to somehow get, because they have to also understand certain industries require to do these amendments to survival of that, because you can get in the short term, you might get a benefit, but the long term point of view, at least next 12 to 24 months, it is important that positively look on those critical points. We are not asking all, but at least the critical points.
Thank you, Ms. Anthony. To Mrs. Shamin Tilakaratne. Yeah, go on.
Niranjan, if I can,
please.
Yeah, if I can just add to that.
Yes.
So generally, the pre-budget lobbying, Niranjan, is generally to get your wish list into the budget speech. That's where you ask for various proposals to be implemented, various plans, various concessions even. And generally the commercial sector will mostly ask for concessions. So the pre-budget lobbying is generally to get those sort of concessions into legislation. The post-budget lobbying is generally what happens is, once the budget spells out, okay, these are the things that have been accepted and are going to be implemented, then the post-budget lobbying starts to fine-tune those proposals so that it fits in a fair and equitable manner for all industries. Now, for example, in case of nations building tax, it also was introduced at 2% on turnover, similar to the social security contribution levy. But then again, some of the industrial sectors, like for example, traders, they came up and they showed the numbers that, they don't make such a margin. They don't make such big margins. So at 2.5, if they had to pay a tax at 2.2% on their top line, that is on their turnover, they will not be able to survive. So taking that into account, then the NBT Act took that into account and they made the rate a lesser rate for the traders. It's at 1%. Then the exporters made a case that the NBT on their turnover is again going to harm their competitiveness. So then there was an exemption given to exporters. So, I believe Sanjeeva is also speaking of similar lobbying, which they are now doing post budget. But of course, it remains to be seen whether all those lobbying will be taken into account.
Understood.
Sorry, over to you, Niranjan.
No, thanks. Also, Shamin, if I may, while I have you, if I may just ask this question. You mentioned that the appropriation bill could be challenged at the Supreme Court when it's at the bill stage. Typically, under what grounds, under what circumstances is the appropriation bill challenged?
As I mentioned, the appropriation bill will contain your income and expenditure items. So where, for example, they feel that any of those items are in contravention of the Constitution, sort of, so then you will challenge it. For instance, if it is, for the very common example, and I'm not saying that it's done here, but the common example is if it mentions about selling state property and so on, or privatization. So on those different aspects, it can be challenged.
My next question is to Mrs. Tanuja Pereira. What is the perception created with these one-off retrospective taxes such as the super gains tax and now the surcharge? What sort of perception is that being created?
The situation compelled the government to have this one-off taxes, because I know that many don't like this kind of one-off taxes, because it's always our tax system is criticized for being ad hoc, and whenever you need something, you impose new tax kind of thing. But the situation compelled the government. I don't think the government wanted to have extra burden on the taxpayers, but I would like to interpret it as the government seek extra support from these large taxpayers, because the large taxpayers are the persons who are contributing more than 3/4 of the revenue of the government. And I think this government, what by imposing this tax, I think we have to see in a way that it is needed to come out from this crisis situation, and not to see it as an extra burden. Of course, it is an extra burden, but not the government is happy. The government is not happily impose these kind of one-off taxes, but overcome the situation, government seek extra support. In addition, what they are supporting, and in addition, what they are doing, the seeking extra support from these largest taxpayers, this has been imposed. So I don't see any other way, because if you have if you see these pre-budget discussions took place, I saw that number of occasions the expertise have proposed this kind of thing. We have to go some kind of at least a one-off tax, or some COVID relief tax, or whatever the terminology. You have to have something, because government granted a lot of tax reliefs once this after 2019, and now it is not these reliefs are reversed, but to come out from this crisis situation, we need to have, the government revenue has fallen drastically. So other than seeing it as a burden, I would like to say it's an extra support seek from the government, from the large taxpayers.
Thanks, Tanuja. To Mr. Anthony, with respect.
Niranjan, if I just might
please,
sorry, Niranjan, if I could just again add to that, and I'm only just saying these because I've been privy to certain conversations with investors, and I just thought I'll share my thoughts. And what Tanuja said is absolutely correct. While we have to be so on the one side, the government managed to maintain consistency by making sure that they didn't amend any of the tax concessions that were given last year. The easier thing to do could have been to just, raise tax rates of the existing taxes, but that wasn't done in keeping with their promise to maintain consistency. At the same time, I mean, this crisis, this pandemic, world over, it has put many economies into trouble, and it's something that everybody is aware of. It's not just something peculiar to our country. So a one-off tax to collect revenue in the short term, I don't think that alone will give any negative perception out there. But then again, even as Tanuja and both Sanjeeva mentioned, the key here is that to make sure it is one time, like as given as a promise given that it's one time and it remains one time. So if it is continued, or the next year again another tax for similar features with another name is introduced, then that is where that negative perception comes in. This one-off tax to help at this time is reasonable, and I don't think that it would cause much of a negative outlook out there. Now, for example, the Social Security levy also, at the various forums, it was mentioned that even it's sort of like a COVID tax to help with this pandemic. So it of course is not going to be 1 year, or not just one time. It may be there for about 2 or 3 years, but it was mentioned that again that tax is also meant to be temporary. So it's good when the legislation comes out, if an end date is mentioned, maybe 1 year or 2 years or 3 years, even if they want to have it. But it's good if it'll give that comfort if that end date is mentioned, and that itself will, you know, given again that bring back that positive outlook. Look, this was done only for this short time during this crisis that's around the world over. So that the one-time taxes alone will not bring out that negative outlook as long as it's not continued.
Understood, Shamin. But if I may just throw this at you while you're on that topic. So on the one hand, we had a tax amnesty bill which came in a few months ago, where essentially, if you were a tax evader, you were sort of given a pardon. And then on the other hand, now you have a retrospective surcharge tax, and you have the the service charge levy tax as well. So how do you, when you're looking at all the tax reform collectively, how does that sit with you?
Yeah, Niranjan, this amnesty.
So the amnesty. Sorry. Go ahead, Tanuja. Sorry.
Go ahead, Tanuja.
Okay. The amnesty is for the past years, Niranjan, and this was announced in 2019 actually. Although this piece of legislation came later, somewhere later, but the thing is, these past taxes and to bring these people into the tax net, and not all the, I mean, the SMEs are mainly, this tax write-off thing is applicable mainly for the SMEs, for them to grow up, because that was the main issue at that time. But again, that those amnesty things have not been withdrawn still. Those because having amnesty, and you can't have much revenue from that, because these are past years. Now the collectible period is actually lapsed. So now those are disputed, some taxes are disputed, and you can't write off those disputed taxes. Only the collectible taxes are write off, and the people who are not there in the tax net, they have to come to the tax system and pay a small amount of tax for their previous years and continue with the tax system, the compliance, enhancing the compliance. So there are certain other aspects as well. But the situation changed the entire thing, I think, this with the COVID situation. But that's it. Yes, Shamin.
Shamin? We can't hear you.
Yeah, it was not really, I don't think it's aimed as to draw the, sorry.
Shamin, you were briefly not clear. If you can start again.
Can you hear me now?
Yes, now we can. Now we can.
Oh, okay. So I don't think, as Tanu mentioned, tax amnesty is a mechanism of generating revenue. It is more to try to, you know, get those out of that, from the informal sector back into the formal sector, and those people moving within the formal economy. So it's not really a revenue generating mechanism, but to, you know, bring back those people into the formal sector. So the taxes, one-time taxes, are of course a revenue generating mechanism.
Yeah, Shamin, no, I was just coming from the perspective where if you're a law-abiding citizen and a taxpayer, you're now paying more taxes pursuant to the present budget. But if you were a tax evader, you've got this pardon under the Amnesty Bill, and you can either come into the fold and pay less taxes now, or you can stay away. I was trying to just get at that dichotomy.
Okay, but once you come into the fold through that tax amnesty, these the new taxes you will not get an amnesty on the new taxes. So then thereafter it's applicable on you as well.
Got
it. But yeah, so
to Mr. Anthony, with respect to the private sector, is there anything else that you would like to tell the legal fraternity with respect to implications on the private sector?
No, basically what we from private sector, as I started earlier, it is absolutely important to create the confidence on the investment. So basically, from one thing is locally we are keep on investing. Second thing is there are a lot of foreign investments are coming to Sri Lanka. So basically, to sustain that, it is absolutely necessary that we continue this consistent tax regime and give the confidence. For example, I know that we did one investment in New Zealand about 10 years ago. So when I went to New Zealand for this investment, they gave me the tax rate for the next 5 years. And also they told all the labor laws and the labor increases for the next 5 years and told this is it. Now, after 5 years back, when I looked back, basically they are stick to that 5 years policy. So that is what the foreign investor will require. So we are going behind these foreign direct investments. So it is absolutely necessary that we have a consistent policy more than anything else. We always tell that we have two main issues to bring these foreign direct investments. One thing is the Sri Lanka's bureaucratic approval system, which when you go to from one institution to other institution, which we can't get, it takes about 2-3 years for a project to get approved. That is one hindrance which we have. And the number two is that foreign direct investment and this and also this is in line with the foreign exchange regulations. What kind of impact a foreign investor can bring funds to the country and how can they take funds back to those channels. So it is absolutely necessary on this both fronts, tax as well as foreign currency regulations, to be consistent. And this particular time period, as Charmaine and Tanuja both said, that private sector very well understand that one-off tax and these kind of even foreign currency conversions, mandatory conversions are necessary for the country to survival and to continue. But we should bring the confidence back maybe 6 months, 12 months later. We say that foreign currency conversions, regulations are released when we are ready, and give the confidence back to bring these investments. So it is absolutely important that sometimes these kind of regulations also can stop foreign investors bringing money to Sri Lanka. Even, for example, even Sri Lankan companies, when you have subsidiaries in all over the world, we can't compel them to bring this money is being created in those subsidiaries, and basically unless they declare a dividend, technically there's no way that you can get these funds to Sri Lanka. So if somebody wants to keep funds out of Sri Lanka, there are so many, we are giving an opportunity for them to not to bring funds to Sri Lanka. So we require foreign currency going forward. So we know that as far as if the government comes and says that, okay, this is for next 6, I know that they will have at least another about 1 or 2 months. They come and say these for next 6 months or next 12 months we will do. We doesn't matter the time, and we know that after that we are going back to our normal position and we can work. So I think we must not, this is a lovely, it's a 5-star, always we say is a beautiful destination we have. We must get all the investors back to this country. When you look at the neighboring countries, the amount of dollar investments they get, even forget about the investments, even the tourism alone, the amount of dollars they get is huge. So we had prior to 31st March 21st April Easter Sunday attack, we had the target by 2025 to go for about $10 billion on tourism alone. That would have been sorted out most of the issues of the country. I think 1/3 of our debt could have been sorted out, foreign debt, if we have got this 10 billion in 1 year. So that is the potential. So what basically the message is we are lobbying is that consistency on these regulations and to bring. So I hope that going forward, these turbulent times will come to an end within very, very soon, and we can go for this consistent position, Niranjan.
Thank you, Mr. Anthony. Again, to Ms. Charmaine Tilakaratne, given the requirement of foreign currency and the state of our reserves, now suppose an FDI comes into Port City, or there is a company, some foreign direct investment comes into Port City. How does that affect our reserves? Or does it affect our reserves at all?
Well, of course, the investment coming in will show up on our balance sheet. in terms of foreign currency. But then thereafter it contributes to the GDP, but of course, as to whether it's going to generate revenue for the government is another question that remains to be seen, because the revenue generation comes through taxes and other fees that are levied. And as we all know, under the Port City Act, there are a lot of exemptions. But certainly in terms of reserves, it would of course help us, because the investment would be then in the country's balance sheet. And the activity itself will again generate future foreign currency inflows.
Understood.
Thanks.
I mean, we're almost out of time, unless any of the speakers have any final matters they would like to address. Okay, I think we've covered quite a bit today. So with that, let me thank the esteemed panel for taking time off their busy schedule to run through the implications of the National Budget 2022. I would also like to take this opportunity to thank the President of the Bar Association, Mr. Sadia Piris, President's Counsel, the Secretary, Mr. Rajiv Amarasuriya, Attorney at Law. And we also, all of us, the panel and myself, wish him a very happy birthday. We also like to thank the Compeer, Tanuja, and of course, the Sessions Committee. Thank you very much. And Tanuja, over to you.
Thank you, Mr. Aruprakasam. On behalf of the Bar Association of Sri Lanka and the Seminars Committee, I would like to thank Mr. Sanjeev Anthony, Mrs. Charmaine Tilakaratne, Mrs. Tanuja Pereira, and Mr. Niranjan Aruprakasam for this very informative and valuable session on the 2022 budget and its legal implications. I would also like to thank all of you who joined us on Zoom as well as on YouTube, and for your questions that have made this webinar an interesting one. Thank you, everyone. Do join us next Saturday at 5:30 p.m. for the 67th webinar of this first webinar series. Stay safe and good night.